All right, it says we are live. Sorry for a little bit of the lateness, but we should be good to go now here. And welcome to the election night live stream for Stock Tricks with Nick. So typically we do these live streams on Tuesday as our midweek movers, where we go over stocks that I'm watching, stocks that I'm currently in, and trying to keep this a little bit shorter. And then we'll do a live stream on Friday nights, 7 p.m. Central Time, going over all the stocks that I traded, what's on my watch list, and then additional trading strategies, tips on position sizing, more of the not just the technical setups. So that's Tuesday and Fridays. If you find any value in this, please leave a like, helps me out tremendously, and follow me on Stock Twits. That's Stock Tricks with Nick, and on Twitter. With that being said, it's election night. Let's go over a couple of our trading rules. I'll go over why a clear winner today would be the most bullish, depending on, regardless of who wins the election, the first hour rule, and some technical analysis on stocks that I'm holding on my watch list, and any stocks that I get from you guys in the comments section. So if I don't go over a stock that you guys want me to review, just drop it down in the comments section, and we'll get to those. So yeah, hope you guys are relaxing with a nice beverage with election night. We'll jump to the map in a second here, but just wanted to start off why I think a clear winner in the election, U.S. election for all the viewers outside of the U.S., is going to be bullish, because the market hates uncertainty. And we've seen the last 2 months or so, since September's high, the market kind of pricing in a Biden win. And then where the market pulled down to some moving averages and kind of held steady. And the only thing that, and now you saw the last 2 days jump up a little bit. The 2 days leading into election are typically bullish regardless of who ends up winning. So I'm not taking stock in the last 2 day rally kind of either way. But the market has priced in a Biden win. So if we get a clear Biden win, that would be very bullish for solar companies, especially who have already been leading. You kind of seen their relative strength in the market compared to the other stocks that we're watching. So solar would take off. Watch Tesla, obviously. But also, more so than any specific stocks to watch, the stimulus bill. The stimulus bill will likely, again, no absolutes in trading, probably no absolutes in politics, as we saw 4 years ago. The stimulus bill, if Biden wins and there is a blue wave, will likely be much larger than if Trump wins, if there's some mixture in the polls. So with a larger stimulus, more people are going to be buying stocks. That's going to free up capital. You saw how Democrats and Republicans couldn't agree on a stimulus bill before the election, and you saw stocks break out and then immediately squat back into trading ranges, or just completely fall back. So blue wave, likely a large stimulus bill, and that's going to be good for the market. The downside to a blue wave is likely higher taxes. Biden's been talking about some capital gains taxes. Not sure if any of that will be actually pushed through. That's just what he's been kind of talking to his base about. So there's the pro and cons on Biden. Higher stimulus, higher taxes. So you might see some major winners sell off this or later on this year to lock in the capital gains from those. On Trump's side, less taxes, not as high of a stimulus plan. But hopefully either way, if there is a clear winner, the stimulus will be passed relatively shortly, and we could go from there. So either way, as long as we have a clear president by, I say we, I'm in the US, clear president by tomorrow morning, I'm going to get a little bit more bullish on the market. Now that doesn't immediately mean that I'm going to be buying every stock that is breaking out the first hour. We'll get to that in a second, but obviously the market loves certainty, hates uncertainty. If the market is, or if the election is a hung election at all, or if we go to bed not knowing who has a clear lead, you'll see, I'm guessing, a lot more volatility in the market and probably a move down if we don't have a clear winner. With that being said, I wanted to jump into the first hour rule that I'm going to be following. And if you've been on the streams before, you know I follow this rule typically every day. I should be following it every day. Some of my biggest losers have been because I didn't follow this. So especially during times with binary outcomes, hopefully binary outcomes, the first hour of the market, you'll likely see either a gap up or a gap down. And you're going to be seeing futures go left, right, or up, down, left, right, whatever. You know what I'm saying. Tonight, don't put any stock into the futures, or don't put any time tracking the futures right now. It's going to be tracking with the election results. So save yourself some emotional energy. So when you go to trade tomorrow, you're not trading with any kind of emotional attachments to the outcome. You can have emotional attachments to the actual election. That's completely fine. But when you go to actually trade, you want to block that out. The market does not care how you feel about the election. The market's going to react to the election how it feels. So I'm fine being wrong. I just want to be wrong very quickly. Back to the first hour rule. If we see a gap up and kind of prices push higher that first hour, we'll want to just sit, let the first hour play out, and then use the high of day from that first hour as kind of our buy points on stocks that we're already looking at as a setup. The opposite is true on the downside. If we gap down tomorrow and there is already a clear winner, use the low point of the first hour as either your sell, your stop loss on any positions that you're holding overnight, or your opportunity to short stocks. So my guess is we might see a gap up and then kind of crash through some lows. So I'm going to be sitting the first hour, just not trading at all, noticing what's holding as good relative strength, but not trying to do too much. Let's let the stocks play out that first hour. There's going to be 250 days a year to trade. You don't have to trade every day. We don't have to get the first step on the market to make money. There's always going to be stocks setting up. So please be patient that first hour. Even if something breaks out, and then keeps breaking out and you miss it, a missed stock is much better than a stock that you get into and you start to lose money on. Especially as the market's been in a downtrend currently, minus the last 2 days. It's always better to take a light approach to these things. So that being said, that's the first hour rule that I'm looking at. And let's just jump really quick to the election results I have right now. 85 to 55. Looks like Texas is blue early on, 22% reporting. I'm not super big into politics, so every swing state I don't track too much. I'm in Illinois, so that goes to Biden there. But so this is where we're sitting at right now. This is what kind of has been priced in already. So still super early in the night. We'll see how the futures are looking there. But all right, let's jump to the charts. All right. Let me get the comments set up so I can see your guys' comments while I'm doing this too. Where is this? All right. So S&P 500, you've seen the kind of turbulence here from September. We pushed down, then pressed back up. Did not make a new high over September's high, and I thought this was kind of forming a cup and handle. But then going into the election this last week, this really sold off. And then Monday, we had higher highs, higher lows, but on less volume. Today, we pushed higher, closed over that 8-day exponential moving average. But again, a lot of this technical stuff, because the 8, the 50, the 20, oh wait, yeah, let me change those so you can see what each of those mean for new viewers. You have the 8-day exponential moving average, 50-day and 20-day, all right around here. So again, we're going to let the election play out and then play the hand that we're given. We're not trying to predict a binary event. That's why going into earnings, we never buy a stock into earnings. If we're holding a stock into earnings, we'll only hold it if we have a 10% gain. Otherwise, we're going to reduce exposure, lock in profit while it's there. Going into a binary event like this, not worth it if you're swing trading, especially as the market's been in this downturn. So if we can move higher, like gap higher and close with a clear precedent over some of these moving averages, then we're right back into kind of a, I wouldn't say bullish, but this gets us back into a position where we're going to be comfortable taking some stocks, breaking out some trades, maybe not put the full size of our typical positions on, but definitely putting more exposure into the market. So that's the S&P 500. I see that it's down 0.5%-ish after hours. I'm not sure where the electoral map was during that time at 7 o'clock when the after hours closed. Let me get rid of the trade history for now. NASDAQ has looked much weaker than the Dow Jones. As you saw, inside red candle yesterday, slightly higher highs, higher lows, today, but could not close, or actually maybe it did, 274.63, no. So could not close over that 8-day exponential moving average. And that's a sign of weakness still in the market. So until we get into a time, something like this, where it's just a constant uptrend, sometimes bouncing off the 20-day, but really in a strong uptrend, there's no that we're trading. Well, Mark Minervini, guy that you definitely should follow on Twitter, always talks about progressive exposure. So after a market has pulled down, flushed out all your trades, you don't want to just jump in with your entire portfolio. You want to take some really quality trades at first, because when the market's pulling back, the trade setup has to be almost perfect for a breakout to break out and hold. Because a lot of the times you get stocks, when the market's down, pulling down, stocks that break out are quickly sold off so companies can soften up their P&L around a lot of the losing stocks that they were trading. So a lot of those stocks that break out typically get sold off quickly when the market is in a downtrend, even if the stock itself is strong. So that's why we're not just putting everything on the table, first couple trades back into the market after we start turning this around. We want to take a couple quality setups, see how those play out, watch a lot of stocks that are showing good relative strength. That's what I'm talking about in that first hour. You want to see the stocks that break out, and then if things start pulling back, that are holding their breakout better than the QQQs, S&P 500, anything like that. And then as the market starts to have 5 days green, 5 out of 6 green days, 5 out of 7 green days, start in an uptrend. I always do that wrong because it's reversed here. Start in that uptrend. Then you could add on more positions. You can increase your position size, take off any hedges that you're using, and then really kind of put the pedal to the metal. But you're not going to do that when the market's this shaky, going into an election night, going into earnings, any binary events. If you're new to the channel, we're very risk first conscious. Even though we're trading some of these growth stocks, we always trade with stop losses. We're always going to position ourselves with the correct amount, or not correct amount, but more of a conservative amount. You're not going all in on any stock. The most that I'll ever trade on a single trade is about 20%, but very, very rarely am I at 20%. Typically 10% is my sweet spot, I'd say. Then we have DIA, Dow Jones. This really popped. And I think it might be a function of pulling down here to this 200-day simple moving average, this yellow line here. You saw it undercut that very slightly, and then on Friday moved higher. And then just like we talk about red candle closes outside of upper Bollinger Bands as kind of a bounce back effect or pullback effect after a stock's breaking out, green candle closes under the lower Bollinger Band typically means that you're going to get a bounce back higher. I'm surprised it bounced all the way over the 8-day. That to me is a little bit shocking. But again, it's all election volatility. We'll see how that goes. All right, so let's cover a couple of the stocks that I'm currently owning. Right now, I have 5 names, all at 5% or less of my portfolio for each name, and I have a hedge on those. So clearly, I'm not trying to hit any home runs going into the elections. I'm just trying to get a feel for the market. So let's cover a couple of the trades that I took this week. First one is GNRC. So zooming out to get the whole picture, first requirement, always be over that 200-day simple moving average, and for that to be in an uptrend. The reason why I like that, the reason why even as a short-term kind of swing trader, I like that is there's no absolutes in trading. If you're on the stream from before, you already know what I'm going to say. No absolutes in trading. We're only trying to put probability in our favor. So if I could stack every type of trading strategy in my favor for a stock to break out, that's exactly what's going to give me the most probability on a trade. So I want the 200-day in an uptrend. You see the 50-day is kind of an uptrend here, 20-day uptrend, and then not any overhead. So this, I don't think even in its existence, it's at all-time highs here. So a lot of stocks that pull down and then are jumping 50% or so from their 52-week lows. There's a lot of traders that are stuck at those higher prices that once the stock goes to those levels, they'll quickly sell off and be like, finally, I got out loss-free, because loss-free for people is an emotional attachment. They don't want to admit that they're wrong, and they won't have to admit they're wrong if they eventually hold till a stock gets all the way back up to their price. So I don't want to be trading any stocks that have a large overhead volume, and this being at its all-time high is fitting that criteria. So you can see they had earnings. I didn't trade their earnings, but this was on my watch list as you can see strong uptrend, and then kind of moved sideways here in this box-ish area, just bouncing around. I knew earnings were coming up, so did not take the trade then, was just sitting on it waiting. Strong earnings move, bullish engulfing candle after the low of the day undercut a lot of these lows, which you saw JD, that we'll get to in a little bit, do that before they broke out after their earnings. A little first hour pull down and then kind of a check mark where pulls down, then breaks right back out. So I took this trade on the breakout. Let's see. I did lighten up exposure on here. So what was my entry price? It was $217.70. So basically right at the high of the day, maybe a little bit lower, but wanted to see that move hold over some of those highs. So got in there, did get stopped out of half. Let's see, at 205. It's probably close to the low. Yeah, almost the low. Just trying to lighten up exposure overall in the market. But you can notice, even though this was pulling down price-wise, relative strength has been holding really strong. So I like that. Didn't sell anything during yesterday's inside day on decreased volume. Today, we had the low of the day at the 8-day exponential moving average, and then closed right at the high of the day, back over the constricted upper Bollinger Band, which if you get a close at the high of the day above the upper Bollinger Band, kind of at the base of a move where the Bollinger Bands are constricted, that typically leads into continuation. Now the election's going to throw that completely off, but this is a quality setup that I wanted to put on, very light position size, but just to feel out the market. So this is GNRC. Next one I got was Snap. So broke out, heavy volume. I bought, let's see here. I bought when it broke over the high this day, the high of, let's see, 1027 on this green candle here that had increased buying volume. Because I figured this would just really quick check back and then just gap and go. But unfortunately, it has pulled down since. I did sell some, again, just lightening up exposure, not because the chart was wrong, but because how much I had in the market with elections coming up was wrong. So I immediately just took that off. And then you can see this pulled back, really low volume on that pullback. Things are getting quiet here, even after a 52% move with earnings and follow through there. So you can see the last couple days, it's just sat right on that 8-day exponential moving average. That's why I love that. I love that moving average to put on the chart. And then today we had higher highs, higher lows, but lighter volume. If you're looking to trade this, then you could kind of use, I would almost wait to where the close here and the open, the close, so that 43.22-ish area. If that clears outside of the first hour, because again, we're not going to be trading the first hour, we're just taking notes of the first hour. But has the gap and go potential here, pulling back, volume drying up, finding some quick support at that 8-day exponential moving average. So that's Snapchat, SNAP. And finally, we have Sleep Number. So I was watching this one for a while. Got onto my watch list after their earnings, and you can see this extended 36% from kind of their base. Zooming out here, you can see it's now cleared its pre-COVID highs, so less overhead there. 200-day simple moving average starting to move upward. 50, 20, 8-day, all doing the same thing, moving higher. So now zooming back in, you can see what we want. Relative strength compared to the QQQ increasing. So as the market's pulling down, this is staying flat, so showing relative strength. Relative strength is basically like your stocks wearing a bunch of floaties at the pool. When the tide comes in and the water levels rise, these will be the quickest stocks to rise because there's just less sellers. The people that got in at these prices still see value at these prices. And while the market was selling off, these guys weren't. So that shows some strength. So what I did was just draw kind of a downward diagonal through there and there. Kind of sloppy for the live stream, but let's see, the price I got in, 64.97. I think that's kind of near the high. Pretty close to the high of the day as it was coming through this upper diagonal there. And then right after that, of course, it just squatted on me. In a really strong market, when everything is holding up well, when there's a strong uptrend, stocks like this with this setup won't squat back into the range. Typically, they'll break out and hold that breakout. The fact that this did squat after that move higher shows me that there's just market weakness at this point. Not so much that this stock is weak, because we're seeing this stock is relatively strong. Just tough time to trade. So that's why we're trading light. That's why we're trading with a hedge. Not trying to play hero ball here. After that undercut, here, I'll get rid of those guys. After the undercut of the previous lows here, you see the low of the day there. This closed right at that 8-day exponential moving average, holding that as support. And then yesterday we had a pretty full candle I think it was like 4% yesterday. Today closed up almost 2%. And now we cleared the previous high. So let's see, what was the high? High there was 67.30. Now we're at, the high today was 67.72. So we've cleared that previous high, has showed great relative strength. Volume got quiet in the base. All the moving averages are moving up. When I say I want to be really, really picky when the market's weak, this is hitting everything that I'm looking for. Even though this is hitting everything, all the checks, I didn't put 20% of my portfolio in here. I didn't put 10%. I put 5%. I'm playing everything safe now because there's going to be a time to press. That time is not yet. Patience, patience. So those are the 3 stocks that I'm holding that I wanted to talk about today. Got some from StockTwits and Twitter that you guys wanted to see, but keep using the comment section and we'll get to those as well. So Etsy. All right, so Etsy had this on the watch list before because we got this strong breakout, let's see, 38%-ish. And then I was watching that 8-day kind of pull back to the 8-day. Volume got really light through there. So I was hoping for just a quick kind of undercut like we got on this day and then taking off higher. This was kind of a warning sign that the market's weak because this is a quality setup on a stock that moved up 38%. Volume got quiet as it pulled back, so less sellers, theoretically. That's what you're thinking. And then it just broke to the downside. Yellow flag on the market there. That's showing weakness. And sold off heavily on heavy volume, closed under 2 important moving averages, the 8-day and the 20-day simple moving average. From there, we kind of got a bear flag where this ran back up, but on lower volume than the selling. And it looked like, well, it was going into earnings. So kind of a run up into earnings. And that, you see, did not hold. Earnings day closed back under the 8, back under the 20. The high volume on the earnings, that's always going to happen. But it was the follow through that's more concerning to me. Follow through selling day was, on increased selling volume. The next day undercut the 50-day and closed near the low. Now, last 2 days as the market was heavily green, we're getting a little bit of a bounce back. But as S&P 500 and as the Dow Jones cleared their 8-day exponential moving average, this didn't even touch it. The high of the day got right to it, a little bit below, and could not break through there, even while the market was super green. So a little bit cautious for me. Not a stock that I would trade right now because selling off on high volume, bouncing back on low volume. We'll give this a little bit more time before we try and trade this. So that's Etsy, ETSY. TSM is next, Taiwan Semiconductors. Something that you can see here, I traded in the past, got in on this doji day. Next day it broke out, sold some into strength, got stopped out of the rest. Basically an even trade. Then it kind of undercut some of those lows, broke back out. From here, now you see another one that I was watching because if we ignore everything past like this day, that was terribly drawn, past that day, this pulled back to the 8-day exponential moving average and held that for many, many days. So we're thinking that's good support after a 15% breakout or move higher. This looks to be bullish if we can push higher there because it is sitting on support. Fortunately, this broke under both the 8-day, 20-day, and has only recently bounced back. Today, we closed higher. We'll see how this plays out. What I'm looking for is, again, I would be picky with these stocks. I think there's probably better setups to take if you're not in the stock already. But if we can move over the previous high, that would be what I'm looking for. Because then also we get an expansion of those Bollinger Bands in the right direction. And hopefully, again, me being picky right now, I would want to see that move on high volume. If that doesn't come on high volume, I'm watching it. I'll keep it on my watch list. It's important to watch stocks that have good setups, that are ready to break out, because that'll give you a feel of the market. just as I talked about with TSM, with Etsy, and a couple other stocks that we've covered in past live streams. When quality setups are breaking to the wrong side, you know it's time to start pumping the brakes, lower your exposure, put on some hedges. And right now, we're going to be waiting for a clear break, clear move on some volume. But that's TSM. Got a request from Macy's M. This is one that has large overhead. So really good example of a stock that does not fit my trading criteria. Doesn't mean you can't make money swing trading it, day trading it. No, there's 1,000 ways to make money in the market. This is not my way. So zooming out so you get the whole picture, Macy's, along with Kohl's, along with every brick and mortar store, has been in a very strong downtrend, even pre-COVID. So not a stock that I would want to trade. Has a large amount of overhead, like we talked about previously. All this volume here, people likely trapped at this range, because you see the selling volume through here to the low was relatively low. It wasn't like everyone got out and people unloaded their shares up here, which is concerning, because once the price starts moving higher, if it does start moving higher, you're going to compete with a lot of traders locked in, or a lot of investors, whatever they are, locked in at these prices that are just so happy to be able to say, oh, I wasn't wrong, I'm breaking even on the trade. So that's why overhead for me is something that I look at. Don't want to be trading into that. Along with that, it's under its 200-day simple moving average, the 200 days in a downtrend, 50, 28, all basically flat. Today I see it was up, closed above all of those, but not a stock that I would be looking at trading. There's ways to make money in the market, but on this channel, I'll be talking about the ways I do it. So don't want to discourage anyone, but I've found the most value trading winning stocks that are showing relative strength as they pull back on hopefully lower volume and then break out even higher. Winners tend to keep winning, losers tend to keep losing. So that's Macy's. Next we have CARR. This is a good example of me not having the 10% profit I needed to go into earnings. So bought on this day. Did I have my 7% that I was looking at? I definitely did. I should have sold some into strength here, but we got the close right at the upper Bollinger Band, or over the upper Bollinger Band on high volume. I was thinking we were going to melt up into earnings. Should have taken some profit there. That's definitely a mistake on mine. And if you're new to the live stream, I'd love to call out my mistakes, because a lot of people on YouTube don't tend to do that. They tend to glorify how easy trading is. Trading is not easy. So I'll be the first to call out my mistakes here. So should have taken some profit at a multiple of my average gain there. Since then, it moved down. I closed the day before earnings because I did not have that 10% profit. Still a winning trade, but not much to say there. Since then, we've had 2 full candle closes. Now you're getting closes over that upper Bollinger Band. As that Bollinger Band is contracted, now is going to be starting to expand. Even compared to the market, this is moving up stronger. So great relative strength even on a bounce back day, and even during pullbacks, it was holding up relatively well. So tough one to take off. And then as we got close to the election, I wasn't adding any new names. But if you're already in the stock, if you held through earnings, had your profit that you needed, no technical reason, we'll see how the election goes, no technical reason at this point to sell your full position. Are you selling some into strength? Probably. That's what I did wrong. Not doing that. So take some profit, put your stop at your entry point, then you have a winning trade, then you're playing with free money. So CARR, great relative strength, closing at the high of the day above the Bollinger Band, looking good. Got Amazon on the watch list. What scares me the most, or not the most, but another warning sign of the market is how little Amazon bounced back. Amazon, Apple, both of them showed relative weakness compared to the rest of the market. And this is Amazon, who just crushed earnings, had great earnings report that sold off. We covered that last Friday. That's never a good sign. And then the rally the last 2 days hasn't gotten much movement at all. 3.5% off the lows, which you see did pull back here. I don't know if this is a mini gap, but so the fact that Amazon didn't rally more is showing a little bit more market weakness than I would have expected. Didn't even get close to the 8-day and has the 50 and the 20-day still up there. This volume is not right. We'll see how that comes in tomorrow. But looking at this tomorrow, if we undercut these lows and you're not out already, and you're a swing trader. If you're an investor, you would love that. Then you're buying more, you're happy, taking that to the bank, holding forever. But if you're a swing trader, you don't want to be holding on to a stock showing more weakness. This is showing relative weakness. Can it come back and break out? Sure, but you can always add back to the position once it starts showing the strength. If we undercut these lows, you have a long ways until some support to 2,700-ish. No, probably, sorry, 2,800, but that's still a couple $100. So that's Amazon. Let's watch those lows for tomorrow, and then you do have the 8, 50, and 20 all above that. It'll have to make its way through there before kind of testing its highs. Last one I got from StockTwits, and then we'll go to a few on my watch list. SEDG, SEDG, was looking super well. Broke out here, up 64% in a couple days. Then you see went flat, held the 8-day exponential moving average. So at this point, this was something that I was watching for. This is creating another little base point, and then it's going to be breaking higher. But it hinted at today's move, because instead of breaking higher, this broke down. And then got a little movement higher, but never could close over that 8-day. That entire time, the market was selling off. This could not close over that 8-day exponential moving average, even though it had been such a strong stock through here. And then that was kind of the hint for you guys. Hopefully you sold some into this red candle as you put your stop under some of these recent lows. Probably got stopped out of the rest before earnings, but you're holding a very little amount into earnings after a pullback like that, giving you some warning signs. So you would have still been up 40%. So maybe you hold on to 25%, a quarter of your position. But that's why you sell some into strength. That's why you sell some with breaks under previous lows when the stock starts giving you some warning signs as a swing trader. Now we're in no man's land. We're well below the Bollinger Band, below all the moving averages except for the 200-day, and kind of back at this base area. So I'll be taking this off my watch list for now. If it bounces right back up and starts to get in a groove again, I can always add it back onto the watch list, but don't want to be spending any emotional energy on a stock that's showing great weakness. So that's SEDG. That's everything I had from StockTwits. Let me check this chat here to see what you guys want to see. SEDG, yep. FSLY, yeah, good example of why you don't just buy the dip after a big drop. So FSLY, they announced like pre-earning numbers where TikTok wasn't going to be as profitable as they expected. So that dropped 30%, 20%. Yeah, around 30%. Dropping 30% is never a bullish indicator. So I got a few comments. Okay, should we buy this dip? No, 30% is drastic. And you saw the highest candle volume there, which is understandable. People getting out, people trying to buy the dip. But the amount of volume during that sell the next day when it opened right at the 50-day simple moving average and then just sold off the rest of the day on high volume, if you weren't out the first day, you should have absolutely been out the next day, because that is just about as bearish as it gets. And from there, it just fell another 25% from there. So let's see, from the highs, down 54%. Now, you can't predict this move which is why position sizing is so important. You're not all in on one stock. You'll never be able to predict this. This is a freak event. But hopefully you handled this well. And once it started showing more weakness from there, you got out. Last couple days, bouncing on low volume. So really good short opportunity if it hits this 8-day and then starts to show weakness, because you can see the selling is heavy. The rebound days are very, very light. So I'll add this to my short list, my watch list for shorting stocks. If this touches the 8-day, like if the market opens super green tomorrow, this is going to be one of the ones that I watch that once it starts to show weakness and pulls back through that 8-day, that would be a great short opportunity. So that's FSLY, Etsy. I think we covered that. Yeah, we covered that. Let's see, ROKU. Yeah, this was one that we were talking about from the long side, quality setup, going like pre-earnings, something that I traded. Let's see, you can see my green and red flags here. So traded in and out, lost a little bit, probably 1% on the trade. And then, excuse me, watching this 20-day simple moving average as it pulled back here. Once it undercut that, that's another sign that this is a quality setup after a really strong move higher. What is that, 40% move higher? Volume getting quiet, relative strength holding fine. That broke to the wrong side. Huge warning sign for the rest of the market, because this is exactly the setups that we're looking for to trade. That broke down. And then they have earnings coming up. When is that? So Wednesday, Thursday after the close. Unless you got in down here, you don't have the 10% profit. I would require holding into earnings, so not something I'm buying, hoping they beat on earnings. Earnings is a binary event, so not trying to trade into that. Peloton is on my watch list, so we'll jump to that one too. So really strong move through here, has pulled back kind of a little bit further than I would have liked. So on my watch list, but likely going to be one of those ones that I actually just watch to see if the market's responding well. Down 22% off its highs, not terrible. Once it gets past 35, especially once it gets past 40, I don't look at the stock. But right now, only down 22% off its highs. Because it's been in such a strong uptrend, those moving averages quickly became overhead. But you can see the last couple of days, even through this pullback, very, very quiet. So not too concerned with the price action here, but I want this to firm up a little bit, maybe allow the 8-day to pull down while this goes back over the 8-day, back over the 50-day. Just a rough drawing right now, but I would be careful with any trading right now. Market's not strong, but if it breaks over this diagonal, maybe you add half of the size, and then if it breaks over the previous highs through here, you add the rest of whatever position size you're comfortable trading with. But definitely watching this going into the rest of the week. Oh shoot, forgot. Yeah, earnings as well. So we'll see how earnings plays out. I'm not holding into earnings, not buying into earnings, but if earnings are solid, then we might get a gap and go where we can trade into there. But that's Peloton. Let's see. Let's go to a couple on my watch list. First one is ARWR. This one is relatively light traded, 1.7 million average last 50 days, but you can see here from this really low part, up 80-ish%, and then we've pulled back right to that 8-day exponential moving average, closed right at it on, is that Friday? Yeah, on Friday. Then we've gotten two higher highs, higher lows. We're back above that. I'm going to be very picky with the entry, so I want this to make a new high. If I do take this trade, again, likely something that I'm just going to be watching for, especially because the 200-day isn't in a strong uptrend. and there is some, let me zoom out, there is some overhead up here. So I like this setup, but I don't love it. So definitely something that I'm going to be watching to keep a pulse on the market, but going to be very, very picky actually taking trades right now. Next one, we have CALX. This one broke out on earnings, has pulled right back to that 8-day. Volume getting really quiet here. So from this pull down to the top, it at one point was up 50%. Let's see, what was their earnings? Closed down here, so close to close, they were up 21% on earnings. Tons of buying volume, even the next day, but a couple red candle closes outside of that upper Bollinger Band. Now we start pulling back down. But very, very quiet pullback. So today we had higher highs, higher lows, recaptured that 8-day exponential moving average. You do have a little bit of a gap in the chart, not much, but we'll be watching this for a higher move. This one I would be slightly more aggressive with, just because its relative strength has been solid. Volume got quiet as it did the post-earnings pullback to the 8-day. Something to keep an eye on. That's CALX. And really quick, if you guys are enjoying this live stream, please subscribe. That helps me out tremendously. Subscribe and like the video. We do these every Tuesday nights and Friday nights, along with a Trading 101 course that I'm slowly putting together. Have an actuarial exam coming up, so that is kind of put on hold till the exam is over, but we'll be getting back to that. So really appreciate it if you leave a like. That helps me out. And share this video if you have other people trading that might find value from this. Also, tomorrow, forgot to mention this in the beginning, terrible at this. We'll be doing just a 10 to 15 minute live stream at 7:30 a.m. Central Time. So I'm in Chicago, 7:30 a.m. Central Time, to see if we do have a president and how the markets are reacting to that. What's the game plan going in? We'll cover that first hour rule again, because even though I know it, I sometimes trade in the first hour. So just to get everyone on the same page, make sure we're not making any emotional decisions based on the outcome. We'll have just a quick 10-minute check-in, 10 to 15-minute check-in, and go from there. So 7:30 a.m. Central Time tomorrow. Make sure you tune into that. I'll put up the link after the video. So let's go to JD. This is one that I got shaken out of. The rest, today, as I kind of pulled down, undercut some of these lows, but did close slightly green. Overall, Chinese names, so a lot of the Chinese names have been doing really well going into the election, probably pricing in the Biden win, but strong uptrend through here, creating a cup. You got your cup right there, and then your handle through this range. So what I'm looking for, actually, I talked about this earlier, how that first hour earnings, first hour binary event, whatever it is, can always give you head fakes. On JD's earnings on 8/17, they pulled back all the way down. They opened up, they quickly pulled down to the 20-day simple moving average here, right back into the base, and then it sprang right back up into a strong 31% move higher, just a really clean move higher that you wouldn't have to worry about. So that's why we're kind of letting that first hour play out and reacting after that. So today we got that undercut, which unfortunately, being in the stock, I have to honor my stops, but you like to see that undercut of the previous lows to get all the stops out before a stronger move higher. So clear Biden win. A lot of Chinese names I think will be taking off. Again, don't know for sure, but this has shown great relative strength. Volume got really quiet towards the end, or towards the middle here, and then a little bit louder just as everything was trading heavier volume. But we'll be looking kind of to break the resistance over these previous highs. If it does that, I'll be a little bit quicker to get into this name, or get back into this name. had my buy entry at this point. So kind of playing with a little bit of profit with JD. So I can risk getting back in. Another one, we got Pinterest, PINS. You can see this has been a monster since COVID. Have traded this a couple times through, and their earnings, what were they up? At one point they were up, 40% on their earnings. Got the red candle close, so you figured there would be a little bit of a pullback through there. Today was basically an inside day on their lightest volume, so sellers are getting a little bit exhausted. It was a lot of the short-term people that were in here selling off this move. Relative strength is obviously still high. Hasn't even pulled back to its 8-day. So today's low was higher than the previous day's low, and we haven't even touched the 8-day exponential moving average yet. So that's showing great relative strength to me. We'll see how everything plays out, but something to watch here for a stock that's already signaled that it's strong a couple times this year, and has just pulled back, pulled back 13% from its peak point after earnings to the close today. So still a lot of room to move up if we get the market turning around. So that's Pinterest. Tupperware, TUP, similar story. Has been really strong as people are staying home, cooking and storing their meals. 200-day simple moving average, moving higher. Had their earnings. I was watching through this because this is that perfect volatility contraction pattern, VCP, that Mark Minervini talks about, that we cover basically every stream. Fortunately, it ended at an earnings day where I'm not trading into the earnings, but this moved higher, up 55% from this move, and then we got the red candle close above the upper Bollinger Band. That starts its pullback to the 8-day, but look at how little this volume is. No sellers on this move. So definitely something to watch for. Got all the trends in the right direction, very little sellers, high buyers, great relative strength, starting to check a lot of those boxes. So that's Tupperware, TUP. And the last one I had was NET, NET. You can see I tried this on the breakout, but got stopped out later on. Very small position size as I was trading everything really light going into the election. But let's see, from kind of this, where we go? Let's go here. From these previous highs and kind of this breakout point, this moved up 44% on high volume. So that's exactly what we want to see. We want to see breakouts with high volume. A lot of buyers come in, and then volume go quiet as it pulls back. That's, for the most part, what you're seeing. Highest volume in the last couple days has been on this red candle, but I wonder how much of that was just undercutting the previous lows here. Still hasn't shown enough strength for me to get back in. We're under the 8-day, under the 20-day. Volume still really light. And they have earnings coming up after market close on Thursday. So this is one where maybe it gaps up at earnings and does that check mark like JD did. Or maybe this just gaps up higher and then we have to start playing the next pullback. But something to watch for here. Net showing good relative strength, basically flat relative strength, volume lighter in this pullback. Let me jump to the comments really quick. What else do you guys want to see? NEO. Oh yeah, definitely wanted to cover NEO. We'll go NEO really quick and then PRPL. So NEO, this is one that we've talked about constantly on this live stream. If you've read Mark Minervini's books, which I really suggest you guys do, Think and Trade Like a Champion. It's the best technical trading book that I've read. This is the ideal tennis ball action that he talks about, where you want to be holding stocks that are tennis balls and not eggs, where the tennis ball will pull back and bounce, and eggs are going to pull back and splat. So you can see every time this breaks out on high volume, pulls back on low volume, bounces on high volume, pulls back on low volume, and you get the point. I'm going to say this 6 times over because it keeps doing the same thing. At this point, here, let me hide some of those trades. I did get out, unfortunately. This is one that I cut a little early through here. Didn't expect the Chinese stocks to really take off as they did, but really strong move here on high volume. You're probably taking some exposure off NEO at these prices, just as it's going through multiples of your average gain. As we're coming up to a binary event, you want to lock in some profit, some hard-earned profit. Not hard-earned, this is a really clean chart. When we say be picky with the stocks that you're trading, this hits everything that you're looking for constantly. Every setup has been really smooth. So if you haven't checked out this chart before, really just look at it, throw on the moving averages that I have, the Bollinger Bands, volume, and really study each of the breakout points, each of the pullbacks. And if you get that pattern down in your head and you can recognize it quicker and quicker, you're going to be able to identify future stocks preparing to break out, which that's all the homework. Trading itself is another thing, but doing the homework, putting yourself through the just hours and hours poring over charts will pay off. But this is a great one to study, NIO. Then we'll wrap it up with PRPL and a look back at the election. So let's zoom out here, get kind of the full story. 200-day and a strong uptrend, 50-day, 20-day, starting to top out here. 8 days pulling back a little bit. Let's see what it's off its highs. Down 17% off its highs. Not bad at all. Not bad at all, 17% off its highs. A little bit higher selling volume these last couple days, and then the 2 days here were on lower volume and a slight decrease in relative strength through here. So I'm being cautious because this could be kind of like, this is the second bear flag. You have your first one where it comes down here, moves up on lower volume, and then breaks to the downside, moves up on lower volume, maybe it breaks to the downside, finds some support. The previous breakout point and the 50-day simple moving average, 26-ish area. We'll probably get the 50-day to move up to hit that. So on the downside, I would watch 26 low area through here. Got some closes and opens over here, all the closes and opens here, and this would have been my pivot point to buy if I did buy into the stock. So this is pulling back right now, but we'll see how tomorrow goes. Maybe we can break over both of these moving averages and break over this downtrend through here. So we'll see. Good one to watch. A PRPL, let's see, 1.3 million, traded 500,000 today. So fine liquidity, not super thin. It doesn't show me earnings. I don't know when earnings are coming up, but yeah, that's PRPL. And with that, let's jump to election 119.91. Texas still blue, 56% in. Interesting. So again, we're not going to let as traders, you're not going to let the results of the election impact how you're going to be trading the next day. You can have an emotional response to that, but keep that away from the money that you're trading with. The more you trade with a strategy, with a plan, the easier it is to admit when you're wrong, which is the number one most important thing. And the thing that once I kind of not mastered, but got better at, has been the reason why I've been consistently profitable lately. The quicker I can see that I'm wrong, admit that I'm wrong, I can get out of the trade, put capital aside, and then I can always get back in when the markets are showing strength. So that's going to be the live stream. Join me tomorrow, 7:30 a.m. Central Time. We'll see how this map plays out, and then we'll go to our own map to see how those play out. Again, if you like the stream, please leave a like. Please subscribe to the channel. We do these Tuesday and Friday. Trading 101's coming up. And then follow me on Stock Twits and Twitter. Links for those